are back with another stock analysis, and this is going to be a bit of a quick one, but Cerence's earnings just came out, I believe, last night, and they were excellent. So all we're doing today is going through their earnings report, looking at the results, and then looking at what happened with the chart as well. So if you're interested, let's get into it. Make sure to subscribe, and yeah. So like I said, this is going to be a bit of a different video than I normally do because I just went over Cerence probably maybe less than a month ago. So all I'm really looking at here is their earnings, and then we'll go over their chart as well. So first things first, licensing revenue beat, connected services as well. Professional services came in a little bit under. Gross margin came in much higher, actually 6% higher. And the gross margin per segment, licensing is at 92%, which honestly makes sense. I mean, it's licensing, so what do you expect? EBITDA margin came in positive versus a very, very negative estimate. Percentage of worldwide auto production with Cerence technology, once again, is at 51%, which is fantastic. And change in number of Cerence connected cars shipped is up 5%, and growth in billings per car is up 3%. These two numbers here are huge. As long as they can continue to grow these numbers, this company has so much potential. Biggest thing here is definitely that growth in billings per car up 3%. That's fantastic. And also the EBITDA margin beating massively by basically 17, almost 18%. That is fantastic. So next up, let's see the additional Q2 and fiscal year 2025 guidance. So gross margin is at 74 to 76. Non-GAAP is a little bit higher. Here's what I'm going to do. I don't think there's too much changes here from the last one. So what we're going to do is going to the last report they had and looking at fiscal year 2025 guidance right here. And then we should be able to get a little bit more information. So this is their 2025 guidance right here. And right now we're looking at gross margin of 67 to 69 compared to right here. Okay, also 67 to 69, which is fine. Free cash flow, 20 to 30 million, still expecting that. Diluted EPS, 92 to 67. Is that on here as well? Yes, it is. Okay, so basically they just reaffirmed, which now that I'm reading it makes a lot more sense. They just reaffirmed the 2025 guidance, which does make a lot of sense. $20 million of fixed contracts expected during Q2. That's nice. Operating results guidance includes $1 million and $8 million of expenses with transformation initiatives, as well as stock-based compensation. So overall, nothing too crazy here. Q2 looks like it will definitely be pretty solid. EPS is going to be positive, hopefully. And other than that, it looks pretty good overall. Let's take a look at the chart now. So up to $14 currently. I believe they are up just about 10%. They were a little bit higher. Just seeing where the stock price is, it wouldn't really shock me too much to see us head, honestly, back up towards the $20 mark. Now, I don't know how well they will be able to hold that area. I think it can still come back down from there. But overall, we could be seeing a new uptrend forming here. So we had this very long-term downwards channel here that they have very slightly broken out of after the last run-up. And now we are finding a ton of support. The past few weeks, we've kind of been bouncing between the 12-ish to 15-ish dollar range. And seeing the growth today, I'm expecting to break the kind of resistance that's been forming in the $15 to $16 range and for it to go up higher, possibly back towards $20 a share. Might not happen. I mean, there's really, if they raised guidance for 2025, I think it could have happened today even. I mean, just look at the last one we had. It was up 106% and then 23%. And then following that, it was up 143% a few weeks later. But honestly, don't expect it to go too much higher today. Possibly within the next 2 weeks or so, we could see it reach back up towards the $18 to $20 range, somewhere around this line. We'll have to see. Last time it was very explosive. This time it's a little bit slower. Don't get me wrong, 10% is 10% no matter what, but it's a matter of will we be able to see the volume that we saw last time with that 106% growth, or with where it'll simmer for a few weeks afterwards. So for example, today it's up 10%. Last time it was up, simmered for a few weeks in a slight uptrend, and then blew up and basically went up to 300 or 400% within 2 days. So that could happen again. Again, this is still a very, very small company. So there is a ton of potential, especially if some big investors start taking notice of this. So overall, we'll have to see what happens. That's all I have on Cerence today. Thanks so much for watching. Make sure to subscribe, and I'll see everybody in the next video.